Let's take stock from Sobha developers as to where is it that they are seeing their quarter gone by and, of course, what lies ahead as well. Jagadish N, the MD at Sobha, joins in on the show right now. Jagadish, great to have you on the show. Thank you so much for taking the time out and joining in. Your pre-sales itself had hit a record high in the second quarter. They've touched about 3,200 crore rupees, as we understand, so far in the fiscal. What are your expectations with regards to what we could see post the festive season, and whether or not you would say that your pre-sales growth guidance of 15 to 20% would be a bit conservative? Would you look to up it then?
Thank you, Aisha. You're right. We have been growing pretty well in the last few quarters. In fact, this is the 9th straight quarter in which we have done better than the previous quarter in terms of pre-sales. And in the first half has been pretty phenomenal. We did about 61% of what we already did last year, which was about 5,200 crores. So, and considering that we could achieve this without any new launches, we have done a phenomenal team, and it also underscores the robust economic and the residential demand environment that we have. So going forward, we should be more optimistic, but we typically do not give as such a guidance, and hence any revision, if anything comes over and above that, that'll be fantastic for us.
You're hopeful you'll be able to beat that estimated guided mark, right?
We certainly work towards anything better than what we already promised.
Okay, but talk to us about what could be the way to do that. What's the plan in terms of the launches that is lined up? Which areas are you targeting? Are you looking at the luxury space, because that's seeing quite a bit of traction right now?
Yeah, absolutely. In the financial year, we plan to have about 6 to 7 million square feet of new launches. In the first 2 quarters, like I said, we didn't have any new launches, but the next 2 quarters and the remaining 5 months of this financial year, we do hope that we can catch up. In fact, we launched our first project last month, October, in Bangalore, one of our largest projects, Sobha Neopolis. That started doing well. So in the coming 5 months, we should be able to do another 2.5 to 3.5 million square feet. And if you're able to do that, these launches will be able to provide us the next leg of impetus in terms of pre-sales.
Follow up.
And in terms of the geographical markets, we have these plans across the board, which is both in Bangalore, in other cities that we have, which is in Kerala as a region, Gurgaon, and in GIFT City.
Follow up there. You said 6 to 7 million square feet is what you have lined up, and I think earlier you talked about 7 to 8 million. So is there any delay in getting approvals? Because I understand Bangalore was a challenge with respect to some of the approvals. Is that the reason you are scaling it down? And also, what could be the revenue potential of this 6 to 7 million square feet?
Yeah, absolutely. You're right. We could have done better than what we had envisaged. As you all know, the real estate, all the approvals are based on the local city government or the state subject. So in Karnataka, we had elections, and there have been changes in the government, and it has definitely led to few weeks of delay in terms of approvals, and that just pushes on some of them into the next financial year. So that's about it. But other than that, we expect to do majority of what we have planned.
Right. Morning, Jagadish. What's the outlook on Bangalore then as a percentage of the regional sales mix? Because that has declined from about 63% in FY23 to about 54%. Other regions have grown quite significantly. So what is your expectation or outlook on the sales mix, and in particular for Bangalore?
Yeah, it's been, in fact, it's very positive that all our other regions, apart from Bangalore, have started contributing really well. As a strategy, we had diversified into several other cities. We are present in 12 cities for a long time, and finally, some of those investments have started paying off really well, and we are very happy about it. At the same time, the majority of the new launches that we are expecting, they are going to be based in Bangalore, at least this financial year. So we should expect the contribution from Bangalore to be higher again in the second half.
Fair enough. And what about the NCR region? Because projects by several noted developers have been sold out within a few hours and days of their launch. Do you believe that this market is now looking a little bit overheated? Do you think that demand over here could temper just a tad?
We have been seeing extremely good demand in our projects in NCR as well. And in fact, we had our flagship project, Sobha City in NCR, and we just completed the entire sale of that last month. So and we are looking forward to new launches in NCR too. I think that fundamentally, there are very few cities in India which are benefiting from the economic growth and corresponding migration, and NCR being one of them. Of course, Bangalore and the other like Hyderabad, Pune, Chennai, and some of the other cities also benefit from it. But NCR is one of the biggest beneficiary. So in the long term, we think that there is a lot of potential there, and we will continue to invest there.
I also wanted to ask about, your debt, because as you're looking to expand into newer geographies and, more and more land parcel acquisition is coming into play, how do you think your debt is going to pan out for the rest of the year?
Ayesha, we are very happy to inform that for the 12th straight quarter, we have generated positive cash flow, and we reduced our debt from almost peak of about 3,050 crores to about 1,440 crores. This was a conscious decision that we have taken to delever ourselves to provide, in fact, impetus to the growth that we can see in the future. And now, since majority of our projects which we have invested in the past and they're coming to fruition now and the cash flows seem to be robust, we think that we will be able to use these cash flows both for continued debt reduction and also wherever we see good investment opportunities, we can cater to that.
Sector question, because right now all of these real estate stocks are seeing fresh highs, a lot of momentum there. The question is, how long can this cycle really continue? Because it's been at least 2 to 3 years since the COVID times that we have seen quite a bit of strong demand trend. Of course, it can't go on forever. So what's your sense in terms of where are we in the cycle?
Well, it entirely depends on how our economic growth is. If the economic growth continues to be very strong, if it has to lead to job creation, and job creation, majority of it is happening in the tier 1 and metro cities, and that will definitely lead to migration. Migration will lead to increase in requirement of homes. Currently, the homes availability in a lot of cities is feeling a lot. There is a demand supply mismatch, and that's clearly visible first in terms of rentals, and that's and correspondingly now we can see it in real estate purchases also. So this, if the economic growth sustains, I think the demand scenario also should sustain.
Jagadish, what I also wanted to discuss, I know while real estate is a very area specific within city also kind of a market, especially that's the case in Mumbai. But purely from an investment perspective, which market do you think is still undervalued and has scope for appreciation?
Well, I think real estate is both a consumption and investment product. So, and any investment product, you've got to see long-term horizon. And if I look at it, then all the metro cities, I think, are still very capable of giving good returns in the longer term. Because, like I said, the underlying fundamentals is that there is going to be sustained increase in demand due to migration and job creation.
So you're saying across the country, one could look at investing in real estate anywhere, and in the long haul, it's going to show an appreciation. I'm sure there's some market which is more lucrative than the other, right?
Yeah, I mean that you can clearly see where there are rental yields are higher. We are seeing rental yields to be higher in more than what it used to be in Bangalore and in Chennai and in some locations in Hyderabad and Pune as well. So so in South market definitely the rental yields have been historically been higher, and in NCR also NCR has historically been low rental yield market, but there also it seems to be that the yields have been higher than the historical yields. So I think again that's a big demand supply mismatch. So it's very tough to say whether one market versus other market, but if you're going for a rental yield, definitely South market seem to be good.
Bit more Jagdish on this, but you talked about job creation and all of that. And if I look at the data, IT sector jobs are actually coming down. They're cutting down on their jobs on a year-on-year basis. Startups aren't hiring as much as they used to. Of course, there's a bit of funding winter there as well. So, is there a case that this will impact the demand on a lag basis? Because we are hearing that job is actually a problem right now.
Well, if you take some of the cities like Bangalore, Pune, Hyderabad, so these cities will continue to generate jobs. I'm not an expert in terms of the other tech sectors. Yes, there would be there is some kind of stress in terms of job creation there, but we believe that's temporary, and giving a leading indicators what we are seeing on the ground from a real estate sales point of view, that the interest from the customer seems to be continue to be very strong. We think that hopefully it should be a temporary phenomena, and if, like I said, it should follow the economic growth. If the economic growth, and we are expecting it to be really good, that has to lead to job creation.
To have you on board. Thank you for taking time out and joining in and giving us a viewpoint on how the overall momentum is picking up, and good luck for the coming quarters. All right, what's going on with the markets then? And Sobha, of course,